I'm Chiwame Mangazi with Business Time on Times. This is a magazine program where we bring you major business and economic news stories making headlines. In today's program, Continental Holdings Limited records a 93% subscription rate in its initial public offer. Also in the program, we dissect Malawi's international trade statistics in the first half of 2026. We have these and other stories. Stay tuned. Hello and welcome. Continental Holdings Limited has recorded a strong response to its initial public offer, with investors subscribing for over 93% of the shares on offer. This paves the way for the financial services group to begin trading on the Malawi Stock Exchange from Monday next week. Published results show that investors subscribed for 701.8 million ordinary shares, valued at 135.45 billion kwacha, representing about 93.17% of the 753.3 million shares that were offered. To hear more, here is Malawi Stock Exchange Chief Executive Officer John Kamanga.
The response has been quite encouraging. Looking in terms of actually the subscription levels which we have so far noticed following actually the announcements of the results. What I can say that in totality, there's been a 93.5% in terms of subscription rate from the investing public. And then the underwriters have taken about 10 million shares thereabout. So you can see that the response has been quite good. And what I would say that this is in terms, it signifies in terms of actually the confidence the investing public has actually on the Malawi Stock Exchange, but also in terms of the company. So to me, as the Malawi Stock Exchange, I would like actually to express our appreciation in terms of actually the response the investing public actually have done to this IPO. What it entails that we have seen in terms of the number of investors, there are more than 10,000 shareholders. So which means that we're adding more investors into the capital markets or the Malawi Stock Exchange. In so doing, the Malawi Stock Exchange is playing that role in terms of actually inclusion, because there are more retail investors coming in. But above all, the Malawi Stock Exchange also plays that critical role in terms of actually wealth creation for the general public, because what would happen is that these funds will be put into productive use by the shareholders who has actually raised these funds. Basically, this is trans holdings, which means that by participating in this IPO, especially on Continental Holdings, we have more Malawians who are now actually the shareholders of this company. And based on the prospectus, this company is operating in different sectors. It has got actually a bank, which is an investment bank. It has got an asset management. It has got a stock broking company. It has got a pension. So to me, it's something which is quite encouraging, and it has given us the confidence which actually the Malawians have expressed by subscribing actually to this IPO. What happens is that some will be taken up by the underwriters, about 10 million thereabout. The remaining about 1.3%, they will still be held under the Trans Africa Holdings, and we expect them to come into the secondary market so that at least they can meet our requirement in terms of the listings requirements under the Malawi Stock Exchange. It requires that the general public, we need actually to have 25%. Currently, the general public, as a result of this IPO, is about 23.7%. So we're still remaining with about 1.7%, which will come into the market in the secondary market. And with that secondary market is also going to give the impetus to the general public so that at least they can participate, especially for those who missed out they would participate in the secondary market by buying those existing shares, but also the shares which has already been bought by the new shareholders who have come into this company. The company will start its secondary trading on Monday next week, that is on the 10th of August. And we encourage the investing community to keep watch in terms of our page as well as our website as we close the day at around 3 o'clock on how the counter will respond based on actually the demand and supply mechanics which actually the company actually will bring on the capital market. So we should expect more listings. You have already seen the Malawi Stock Exchange has been quite vigilant in terms actually what we call the B2B, business to business courtship with most of the potential companies. You have seen in the paper last week whereby Presken is actually also preparing to come on the Malawi Stock Exchange. There are also others within the financial sector who are also coming onto the stock market. So I would say that by next year, we should be having two more to be added on the Malawi Stock Exchange. But we are not concentrating only on the equity side, but we're also quoting some of the state-owned enterprise so that at least they can come on the stock market through debt issuance, so that at least they can actually issue debt to the general public, and then the general public becomes debt holders. So instead of being equity holders, which means in terms of the shareholders, they'll be now lending money to some of the state-owned enterprise. We have actually earmarked some of the, especially the commercial ones, which actually we know they've got huge projects. For example, like the road fund, the water boards, the utility, the energy companies, all these actually they're looking forward actually to issue debts, and we believe that one or two of these companies they should be in a position to come to the stock market so that at least they can issue debt to the general public.
Still on the stock market, shareholders of Press Corporation Limited approved a resolution to subdivide the company's shares on a 1-for-35 basis, a move expected to improve trading of the stock on the Malawi Stock Exchange. The resolution was passed during the company's annual general meeting after shareholders also approved the group's 2025 financial statement. More in this report.
The financial statement shows that profit after tax more than doubled to 261 billion kwacha from 126.3 billion kwacha in 2024. Revenue also rose to 460.2 billion kwacha from 314.3 billion kwacha, while earnings per share increased to 1,208 kwacha 6 tambala from 538 kwacha 4 tambala. Under the approved share subdivision, every existing ordinary share will be split into 35 ordinary shares. The transaction will increase the number of issued shares from 120.3 million to about 4.21 billion shares. PCL Chief Executive Officer Ronald Mangani says the company decided to split the shares to improve liquidity and make the stock more accessible to investors.
The idea is to basically make the shares more liquid in the market. What we noted was that because the shares were very few and because they were pricey, even though they were also trading at a discount, it became necessary for us to split them so that we have many shares in the market and also that the price can be discovered to real value. So once the share split process is completed, we expect that the market will have more PCL shares to trade. We expect that more trading will take place. We expect that as a result of that more trading, there will be more liquidity and the real price of PCL shares will be established on the market. You know, management teams and all other players in the group have been working very hard. You can actually see that the performance has been very good across most subsidiaries and joint ventures and associate companies in the group. This is all a result of the fact that everybody has been applying themselves to the best of their ability to ensure that the company moves forward. So basically OCL is disposing of its assets, and essentially the result of that disposal of OCL assets is that OCL will eventually not continue to exist as a company, but the critical assets will be acquired by TNM. Those include the data center, and the fiber, which OCL owns at the moment. It is very critical for the business of TNM to acquire those assets, and we're happy that that's what has been achieved. So in the last half of 2026, it's a mixed picture that we see. Some of the challenges and headwinds that we face as an economy will continue, but at the same time, because we are a very diversified company, the portfolio is quite diversified. We are, in a situation where we're able to survive and, manage those headwinds in a manner that will continue to allow us to perform better than competition in the market. So in the energy sector, it is still our flagship project. We are hoping that we'll be able to complete that project sooner than later. But the problem that we face there is the need for us to complete what is called an implementation agreement with the government. That implementation agreement is a critical document to allow us to achieve financial close. To the extent that we have not been able to complete that agreement, it is difficult for us to proceed, although we are also looking at other alternatives. And key among those alternatives to ensure that we continue to engage the government in order to achieve that milestone. So the permanent solution that we have for the spillage problem is that we would like to commission a zero liquid discharge plant at Presken, and we have a similar project going on at ESCO. The zero liquid discharge plant will convert effluent into organic fertilizer and other products. And once we convert effluent into fertilizer, organic fertilizer and other products, there will be no need for us to actually dislodge the wastage into those dams that we're actually spilling over. And therefore the problem of spillage will be completely resolved.
Minority Shareholders Association of Listed Companies General Secretary Frank Harawa welcomed the decision, describing it as a positive development for investors.
That's good news. I think when things are happening like this, you tell that your board is working, your board is considerate, and that was a good move, really. Now imagine if I had 1,000 shares now, I would be having 35,000 shares. So it's a good move, really, for our board. And it will also mean more shares on the market, and the share price may be appreciating again. And look, it's Press Corporation's share has not gone down, has always been appreciating. So with this, I think shareholders will be very happy. Has done well. They've declared the dividends, share appreciation. So good job. I think you've seen that most of the counters on the Malawi Stock Exchange have gone down, but not Press Corporation share. It's one of the few that have not gone down. So we're excited about the company. I think the future looks bright. With this spirit, it's even more brighter. So it's time to buy. It's a share to buy, even accumulate for that matter.
The subdivision will take effect after the remaining regulatory approvals and implementation process are completed.
This is Business Time on Times. We'll be right back. Exports in the first half of 2026 surged to $400 million from $256 million during the same period last year, showing a strong trade performance. However, this improvement was offset by a growing import appetite that drained over $2 billion. This left a higher trade deficit of $1.6 billion in the half from $1.44 billion last year during the same period. Kingsley Jassy has the details in this report.
This trend appears to show recovery of the production sector that has struggled to recover pre-COVID-19 levels, as annual exports hardly pass $1 billion mark, while imports continue to rise, reaching $3.6 billion last year. However, Principal Secretary in the Ministry of Industrialization, Business, Trade and Tourism, Wiskes Nkombezi, said the breakdown of imports in the first half of the year showed the growth was driven by industrial items that will lead to production increase.
You know that we had a lot of, for instance, what I would call areas. There is demand for us to produce more. Some of the things that we use to produce are imported, like raw materials, like machinery, like other parts, spare parts and others that we need for our local production. So whilst we are doing export promotion, we are also mindful that our economy also needs imports to help us in production. But what matters is how can we use the imports into the productive sectors so that the increase in exports continue rising. Because at a certain point, you will see that the imports that you are using in the productive sector are helping you generate even more exports. So that's what matters.
Meanwhile, statistics from Reserve Bank of Malawi show that between January and May, the country had foreign reserves averaging about $615 million per month, a considerable increase from about $539 million during the same period last year. This means the import cover improved from 2.1 months during the first 5 months last year to 2.4 months this year. Several economic indicators have showed signs of economic recovery as inflation is at the lowest 21.1% in the last 4 years. Economic experts say government needs to embrace these signs of recovery and make the most of them to increase the country's production capacity and bring down public debt.
President of the Manufacturers Association of Malawi, Gloria Zimba, says manufacturers continue to operate under hard conditions which threaten business stability. Among the challenges are digital tax stamps administered by the Malawi Revenue Authority. This comes against a background that in 2025, domestic excise revenue reached 202 billion kwacha, surpassing the initial target of 199 billion kwacha due to the digital tax stamp initiative. Zimba explains.
It has been 2 years since the government introduced the digital tax stamp, which is famously known as the DTS, digital tax stamp. Your question is pertinent to say what has been the performance of the manufacturing sector the first 7 months of the year 2026. We didn't start well, and we didn't close 2025 at a good note. A lot of companies were in the negative when you compare to how much they sold and how much revenue they were able to make in the previous year. Most companies, when you check them, they were ranging between -20 to -45% over last year. So we can say the sector is shrinking in terms of performance. However, we've seen a bit of stabilization between June and July, probably because of the harvest season and probably because of the tobacco. But we didn't have much excitement in terms of peak, because these months normally, when you look at the 3 years ago or 4 years ago, you have this trend where we normally peak from end of April, May, June because of the harvest period and because of the tobacco period. So you can actually see the spike and then it drops again off season. This year there is no season. You talk to any manufacturer, they will tell you there is no season. You know, it's like a flat line. But that flat line is negative versus how much we sold and how much revenue we made last year. We need to look at all the relevant tangents of the economy. So the first tangent is the cost of doing business. So from late 2024, 2025 to 2026, cost of doing business has been rising from fuel, from levels of water, electricity, even labor cost itself. It's just a few months ago when maize dropped, but the food inflation was also very high. So the Malawi economy is mainly driven by food inflation. When food goes up, everything goes up. Although food has dropped a bit, but Malawi still remains hyperinflation country. There's a lot of instability in terms of our inflation. Over and above that, bank rates, although they reduced by 2% 2 months ago, but we are still very high, because when you add the base plus lending rate, you find that cost of borrowing from the bank still remains between 25 to 30%. So for a manufacturer to go and borrow from commercial banks working capital is still very expensive. And when they are only selling 30% less than the previous year, it's also difficult for them to formally or properly pay back that bank loan. Over and above that, government also adjusted upwards some taxes. VAT is now 17.5%, and some taxes were added. So that has added on to the cost of doing business. We are talking about the tax stamp. Initially, in 2024, when the MRIA was introducing the tax stamp, we had a meeting. And in that meeting, our main worry as manufacturers was the cost of the stamp, because government was not taking away excise tax. Excise tax would still remain. But over and above that, we were worried about the cost of the stamp. And at that time, we were assured that there would be no additional cost. The same operating cost that we were incurring before the introduction of the tax stamp, they said it would be the same. But as time went, as we started implementing and installing the tax affixing machines on our production lines, we realized that there was that cost of affixing machines along our production lines. There was a cost that would come in with downtime hours, because the machine is affixed along that same production, your batch production line. This tax affixing machine is part of your batch production. So when this machine is on breakdown, you can't run your machine. You need to stop and call SICPA technician. Sometimes the SICPA technician is within your premises, but at times the breakdown is bigger. They will wait for support from somewhere. So during that period, the downtime hours, we haven't agreed and we haven't resolved up to now to say who bears that cost, because your line is okay as a manufacturer, but you've got this breakdown because of the SICPA machine.
Well, with that story, we've come to the end of today's edition of Business Time here on Times Television. It is a magazine program where we bring you major business and economic news stories making headlines in the country. On behalf of the entire production team, I'm Chimwemwe Mangazi. But always remember, if it doesn't make money, it doesn't make sense. Bye for now.